What is up guys, my name is Ignas, welcome back to the channel. We are now still on the path to finding the best stocks from the healthcare sector, and for today's dividend comparison I've picked 3 names from the diagnostics and research industry. So the first name is Thermo Fisher Scientific, ticker symbol TMO. On the year to date the stock went lower for 8.05%, that is a 180 turnaround in 1 year plus 8.88%. And then if we zoom out even more to the last 5 years, TMO was trading at $172 back in 2017 and did go higher for 243.65% to almost $600 now at $593.25. The company is quite large at a market cap of $232 billion and currently it is trading at a dividend yield of 0.2%. So this will be the first stock for the comparison, but I do have 2 more from the same industry. So the second is Danaher Corporation, ticker symbol DHR. On the year to date the stock is down for 6.93%. Different to Thermo Fisher, 1 year's performance is in the negative at minus 6.7%, but it is way better with 5 years, going from $8 in 2017 to $293.63 now, up for 263.39%. Company's market cap is also over $200 billion at $213 billion, and the dividend yield is just a bit higher at 0.34%. Now for name number 3 I went with Agilent Technologies, ticker symbol A. On the year to date the stock is down for 10.95%. 1 year's performance is a bit worse at minus 14.52%, but in the last 5 years growth was quite decent, going from $61 in 2017 up for 127.51% to $139.28 per share. Market cap here is way lower than the other 2 at $41.6 billion US, but the dividend yield seems to be way up there at 0.6%. So these 3 will be the names that we are comparing, and to make tracking easier, let's use Google Sheets. So in order to make a dividend comparison possible, we'll use these 5 different metrics: dividend yield, dividend payout ratio, years of consecutive dividend increases, 5-year compound annual dividend growth rate, and the current dividend yield compared to its 5-year average. We'll take the number on each metric from all the names and compare those in between. The stock with the best result will get a point for the metric, then we'll calculate results, and the name with the most points will be considered the winner of this comparison. I do hope that it will be easy to follow, so let's start. So the first metric we have is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. Currently Thermo Fisher is paying a dividend of $1.20, which at the price of $593.12 per share is a dividend yield of 0.20%. Now let us switch to Danaher. Their dividend is at exactly $1 per share, so at the price of $293.04, that is a dividend yield of 0.34%. And now for Agilent, the dividend here is at 84 cents per share, so at the price of $139.73, we now have the dividend yield at 0.60%. Metric number 2 is the dividend payout ratio. Percentage here shows what part of company's earnings are being paid back to investors as dividends. So in Thermo Fisher's case, the dividend payout ratio is at 4.89%, meaning that less than 5% of company's earnings are being used for dividends. Now for Danaher, the payout ratio here is at 9.26%, so almost 1/10 of earnings are being paid out as dividends. And we have Agilent with a dividend payout ratio of 15.67%, so here is around 1/6 of company's earnings used for the dividend. Now the next metric is years of consecutive dividend increases. So for how many years in a row the company has been increasing dividends for at least 1 quarter every year. In Thermo Fisher's case, that is 5 years of consecutive dividend increases. Now if we switch to Danaher, it seems that they have started doing it 1 year earlier, as they have been consistently increasing dividends for 6 years straight. But Agilent seems to be doing it way better, as their dividend has been consistently increased for the last 11 years. Metric number 4 is the compound annual dividend growth rate. We'll be using the 5-year average including the next year's estimate. So for Thermo Fisher, the 5-year dividend growth rate is at 12.03%. Switching to Danaher, their compound annual growth rate is at 9.44%. And taking Agilent, it seems that they have the smallest growth rate at 6.57%. Now the last metric we'll be using is the dividend yield compared to its 5-year average. And for that we have my dividend investing watchlist on Google Sheets. So here is Thermo Fisher's dividend yield history for each quarter of the last 5 years. And out of that we calculated that on average in 5 years its dividend yield was at 0.24%. So we saw the highest yield back in 2017 at 0.32%, over that 5-year average for 33.33%, and the worst one was by the end of 2021, with a yield of 0.16%, under the average for 33.33%. But if we would be getting into the stock right now at a yield of 0.2%, that is still under the 5-year average at minus 16.67%. So this is here that metric that we'll be using for our comparison. Now let's go for Danaher, and here it's its dividend yield history of the last 5 years, from where we calculate that on average the stock was trading at a dividend yield of 0.44%. So the best time getting in was back in 2017 at a yield of 0.65% over the 5-year average for 47.41%, and worst was again by the end of 2021 with 0.26% under average for 41.04%. But if we take the stock right now at a yield of 0.34%, that is again under the 5-year average for 22.89%. Now let us check Agilent, and out of its dividend yield history we calculated that on average the stock was trading at a dividend yield of 0.73%. So the best time to get in was back in 2018 at a dividend yield of 0.94% over the 5-year average for 28.6%, and worst was through the majority of 2021 with a yield of 0.5% under average for 31.6%. But taking the stock right now at a dividend yield of 0.59%, we are still under the 5-year average for 19.28%. So we got the numbers for the comparison, but if you would be interested in doing a similar analysis yourself, you are able to access this stock watchlist by following the first link at the top of the description. Otherwise, feel free adding a ticker in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunities available in the market that I'm still missing. So we are back with our comparison table, the numbers for each metric are in, and we can now start assigning points. So for the dividend yield, the first point goes to Agilent with 0.60%, a point to Thermo Fisher Scientific for the lowest dividend payout ratio at 4.89%, years of consecutive dividend increases a point to Agilent with 11 years, 5-year compound annual dividend growth rate goes to Thermo Fisher with 12.03%, and the dividend yield compared to its 5-year average again goes to Thermo Fisher Scientific, being under the average for 16.67%. So Thermo Fisher has 3 best metrics, Danaher 0, and Agilent 2. This means that with 3 points, Thermo Fisher Scientific is considered the winner of this comparison. Now if we take a look into my Revolut portfolio, I do already have a position in TMO that was started way back in May of 2021. The buying price on average there is at $454.86, and since the stock is now trading at $592.28, I'm up for $24.17 on this position, which is now growth of just over 30%. It is still currently a small position, 1.68% of the portfolio, but now after doing the comparison, I'll be willing to add money into this name going further. So that was it for today. Make sure to support the channel and leave a thumbs up under the video. Have you been adding into Thermo Fisher recently? Share your stance or your position in it in a comment below. If you would be interested in getting access to my watchlists and notes, then consider memberships. By becoming a member, you will be invited to Discord, where I share all my papers and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I've looked into several other companies, so if you would be interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.